Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, I'm actually going to talk about a breaking article that was written about 12 hours ago by Ray Dalio. Ray Dalio is one of the founders of Bridgewater Associates. Bridgewater is essentially one of the biggest hedge funds in the world. They manage tons of money for tons of wealthy people. And this article, it's called "The World Has Gone Mad and the System is Broken." So that's why I'm kind of keeping the subject here called Dalio Speaks. And he's pretty much eloquently summarized what some of the issues are going on with the world financial, economic, and political system going on right now. And this is a must-watch video, and this is a must-share video. So without further ado, I'm going to go into the article right now. I'm going to actually read it for you, and then we're going to go over key points that I've highlighted that I want to kind of dissect and give my own opinion on, with a big question at the end of the video. So without further ado, let's get right into it. So I typically start my mornings with breakfast. Today I had bacon and eggs. And I go on LinkedIn, I go on other news sources, I go on a million different things just to get caught up for the day and see what's going on. So I came upon this article right here that I'm going to share by Ray Dalio, as I mentioned in the intro of this video. "The world has gone mad and the system is broken." So Ray Dalio, as I mentioned in the beginning of this video, is pretty much, as you can see here, the co-chief investment officer and co-chairman of Bridgewater Associates. Bridgewater Associates, like I said, is one of the biggest hedge funds in the world. So Ray Dalio, he posts every once in a while. So when he posts, I definitely read it. And this was posted about 12 to 13 hours ago. And I'm going to go through and actually pretty much go through this entire article here and read it, because you guys need to absolutely learn this, and it just gives you a different idea of what's going on in the world. And I think that Ray does a great job of echoing what a lot of people or investors have been thinking about over the past 5-10 years. So let's get right into it. So Ray Dalio, the title is called "The World Has Gone Mad and the System is Broken." And he says this because money is free for those who are creditworthy, because the investors who are giving it to them are willing to get back less than they give. More specifically, investors lending to those who are creditworthy will accept very low or negative interest rates. So in my last video about the Fed injecting $211 billion, they keep cutting rates, as I mentioned at the end of that video, which just happened again after that video was posted. And won't require having their principal paid back for the foreseeable future. They're doing this because they have an enormous amount of money to invest that has been and continues to be pushed on them by central banks that are buying up financial assets in their futile attempts to push economic activity and inflation up. The reason that this money that is being pushed on investors isn't pushing growth and inflation much higher is that the investors who are getting it want to invest it rather than spend it. So this second highlight right here, want to invest it rather than spend it, that's 100% true, you guys. So the reasons a lot of stocks are going higher, and the reason a lot of stocks are doing well, is because companies are taking out cheap debt, as Ray is talking about, to buy back their own stocks. There have been a record number of corporate buybacks buying back their own stocks. So what I mean by that, just for example, I'm not saying this is factually true, I'm just saying that's like Coca-Cola or McDonald's being the biggest purchaser of their stocks. All the meantime, insider trading or internal trading, such as shareholders like C-level executives, is definitely super high right now. So this dynamic is creating a pushing on a string dynamic that has happened many times before in history, though not in our lifetimes, and was thoroughly explained in my book, Principles for Navigating Big Debt Crises. As a result of this dynamic, the prices of financial assets have gone way up, and the future expected returns have gone way down, while economic growth and inflation remain sluggish. This is pretty much what I talked about in that Federal Reserve video that I did, you guys. They keep cutting rates to stimulate an economy that is perceived to be doing well, even though if you peel back layers of the onion, you'll see that it's pretty much doing well because of a lot of cheap debt and a lot of cheap money being out there, which is what Ray is saying here in the first place. So those big price rises and the resulting low expected returns are not just true for bonds, they're equally true for equities, private equity, and venture capital. These assets' low expected returns are not as apparent as they are for bond investments, because these equity-like investments don't have stated returns the way bonds do. As a result, their expected returns are left to investors' imaginations. because investors have so much money to invest, and because of past success stories of stocks and of revolutionary tech companies doing so well, more companies that at any time since the dot-com bubble don't have to make profits or even have clear paths to making profits to sell their stock, because they can instead sell their dreams to those investors who are flush with money and borrowing power. This is so true, you guys. Take a look at this article by Crunchbase. This was in the summer of 19. Unprofitable IPOs are getting bigger. So if you look at all the sexy IPOs that came out, like Lyft, Pinterest, Uber, all those companies that are not profitable, look at this chart right here, you guys. You can see from 2009 all the way till 2016, there were only about 6 to 8 companies that IPO'd that weren't profitable. If you look at 2018, that number almost doubles to 15 unprofitable companies going public. Okay, so some of you may be younger, some of you may be older, but I remember the dot-com bubble in the early 2000s. When I was a little kid, basically I was watching MTV, and there was I think it was like Daria. If you guys are old enough to remember Daria, or I forgot what show it was, but basically the guy was like, "Oh, you want to work for us? Here's some stock," and he literally took it off of like a paper towel roll, and he's like, "Here's some stock," and it was making fun of like the dot-com bubble. So anyway, I digress. So there is now so much money wanting to buy these dreams that in some cases venture capital investors are pushing money onto startups that don't want more money because they already have more than enough. But the investors are threatening to harm these companies by providing enormous support to their startup competitors if they don't take the money. This pushing of money onto investors is understandable because these investment managers, especially VC and private equity investment managers, now have large piles of committed and uninvested cash that they need to invest in order to meet their promises to their clients and collect their fees. So what he means by that is basically, say you're a wealthy individual, you've given Ray Dalio or whoever, a bunch of money, and you're saying, hey, you promised me, well, you can't guarantee returns, but you said you're going to make anywhere from 7 to 8 to 10% on my money, where's my money? So these asset managers are sitting on this big pile of cash, and they don't know where to put it. And that's why they're kind of just being forced into these creative investments. I mean, look at WeWork, look at Uber, look at Lyft. A lot of stuff has been happening lately here. So at the same time, large government deficits exist and will almost certainly increase substantially. So this is something pretty cool. If you guys don't know about the usdebtclock.org, I highly suggest you check it out. So this thing has been around forever, and whoever made this is hilarious. This is true. All these numbers are pretty much accurate. The U.S. national debt over here on the left side of the screen actually is $23 trillion. So at the same time, large government deficits exist and will almost certainly increase substantially, which will require huge amounts of more debt to be sold by governments, amounts that cannot naturally be absorbed without driving up interest rates at a time when an interest rate rise would be devastating for markets and economies because the world is so leveraged long. So the reason I highlighted that is because it goes back to my video about the repo markets and there being liquidity issues. So basically what Ray is saying is that the government, they keep cutting rates because the world is so leveraged that if they raise the rates, a lot of those things would pop. A lot of people would default on their loans, kind of like what happened in 07 and 08 with mortgages. Where will the money come from to buy these bonds and fund these deficits? It will almost certainly come from central banks, as I made a video about, which is this one right here, which will buy the debt that is produced with freshly printed money. This whole dynamic in which sound finance is being thrown out the window will continue and probably accelerate, especially in the reserve currency countries and their currencies, for example, the US, Europe, and Japan. So if you want to look at the reserve currencies, I pulled up this from Wikipedia. It's basically showing who shares the biggest portion of being the world's world currency composition, if you will. So US dollar makes up 61% of that. Then you have the euro, and then you have the Japanese yen, which is what Ray Dalio pretty much just talked about. And I have my own theories about this, why the U.S. is so high. Oil is traded in dollars. Sorry, I didn't mean to say that. At the same time, pension and healthcare liability payments will increasingly be coming due, while many of those who are obligated to pay them don't have enough money to meet their obligations. So my wife works for a government hospital, okay? So when they talk about like teachers and nurses and cops and firefighters or whoever, these state pensions, I'm scared about that because some of them may go bankrupt. So I talked to my wife about it. You know, right now she's obviously still investing into it because it comes out of her paycheck automatically. But who knows where that's going to be 10, 15, 20, 30 years from now. So right now, many pension funds that have investments that are intended to meet their pension obligations use assumed returns that are agreed to with their regulators. They're typically much higher, around 7% than the market returns that are built into the pricing and that are likely to be produced. As a result, many of those who have obligations to deliver the money to pay these pensions are unlikely to have enough money to meet their obligations. So those who are recipients of these benefits or expecting these commitments to be adhered to are typically teachers and other government employees who are also being squeezed by budget cuts. They are unlikely to quietly accept having their benefits cut. While pension obligations at least have some funding, most healthcare obligations are funded on a pay-as-you-go basis, and because of the shifting demographics in which fewer earners are having to support a larger population of baby boomers needing healthcare, there isn't enough money to fund these obligations either. So the reason I highlighted that is because when I worked in commercial real estate, we sold all of our office portfolio. We had about 750,000 square feet of office portfolio that I used to lease up, and we divested all that and went straight into senior living. So 10,000 people every day turn 60 years old in the United States. There's a fun fact for you. Since there isn't enough money to fund these pension and healthcare obligations, there will likely be an ugly battle to determine how much the gap will be bridged by cutting benefits, raising taxes, and 3, printing money, which would have to be done at the federal level and passed to those at the state level who need it. This will exacerbate the wealth gap battle. While none of these 3 paths are good, printing money is the easiest path because it is the most hidden way of creating a wealth transfer, and it tends to make asset prices rise. That's what we're seeing, you guys. Why do you think the stock market is at an all-time high right now? We've been in 10 years of pretty much, I don't want to say quantitative easing, but just printing money. That's why housing is so expensive. That's why stocks are so expensive. All these people that like have these investing channels that are like, I made 8 bajillion %. That's awesome. So did a lot of people because a high tide raises all ships. Everyone is doing well right now, quote unquote well. So after all debt and other financial obligations that are denominated in the amount of money owed only require the debtors to deliver money. Because there are no limitations made on the amounts of money that can be printed or the value of that money, it is the easiest path. The big risk of this path is that it threatens the viability of the 3 major world reserve currencies as viable storeholds of wealth. So going back to the dollar, the yen, and the euro. At the same time, if policymakers can't monetize these obligations, then the rich/poor battle over how much expenses should be cut and how much taxes should be raised will be much worse. As a result, rich capitalists will increasingly move to places in which the wealth gaps and conflicts are less severe, and government officials in those losing these big taxpayers will increasingly try to find ways to trap them. At the same time, this is almost over, you guys. It's pretty much done at the end of this paragraph. At the same time, as money is essentially free for those who have money and creditworthiness, it is essentially unavailable to those who don't have money and creditworthiness, which contributes to the rising wealth, opportunity, and political gaps. Also, contributing to these gaps are the technological advances that investors and the entrepreneurs that I previously mentioned are excited by in the ways I described, and also replace workers with machines. Because the trickle-down process of having money at the top trickles down to workers and others by improving their earnings and creditworthiness is not working, the system of making capitalism work well for most people is broken. This set of circumstances is unsustainable and certainly can no longer be pushed. It has been pushed since 2008. That is why I believe that the world is approaching a big paradigm shift. And you can see here only in about 12 hours, or excuse me, this was posted 20 hours ago. Sorry about that. There is 7,000 upvotes, claps, and light bulbs, and then you have 539 comments. So if I refresh this, there's probably going to be a lot more because this is starting to gain traction here. 589. Okay, not even that much. So anyway, you guys, what do you think about this? The reason I decided to make a whole video about this article is because I think he touches on a little bit of politics, obviously finance, and obviously the way the economic system works, period. You mix that in with pensions and healthcare, and you can see why a lot of people are worried about this economy. So with all that being said, where do you think this is going? And by this, I mean just like not human society. I don't want to get all like hippie on you, especially at 11:59 in the morning. But basically, what do you guys think about capitalism? Is this an argument for universal basic income? I'm not advocating for any of these things because I live in America. I'm obviously an entrepreneur, so I have some bias towards capitalism. But at the same time, I'm completely against like crony capitalism. People lobbying to get their special interests met, things like that. I think the system, when it's pure, works well. However, we know that in any system, whether it's communism, socialism, capitalism, you name it, there's always going to be a form of corruption because humans, not most of us, but the ones making decisions inherently tend to be corrupt. So what do you guys think about this? A little bit of an educational and philosophical video. Please comment down below and let me know what you think. Also, get on the waiting list for my free investing guide. This is actually my unbiased, objective review of different investing platforms. When you read something like this, it's kind of like scary, like should I even be investing? But at the same time, when the asset prices do go down, sometimes it's some of the best times to get back in. So with all that being said, thank you so much for watching. Comment down below and please give the video a like and share this with one friend. I think this is a must-read article. If you stuck around this long, thank you so much and have a prosperous day.